Hello traders, hello everyone, my name is Gregor and welcome to our new episode of Surfing the Elliott Waves, where I will look at some of the most interesting developments for this week. This video has been brought to you by Orbex. I will look at the euro dollar, Aussie dollar, dollar CAD, crude oil and gold. So euro dollar, as you know, is moving very nicely to the upside, and we've been tracking this bullish structure and a new 5-wave advance after this drop corrective one towards 1.16 level. So either if this is wave C or maybe wave 5 of a much more bullish structure, we still expected 5-wave advance from this October lows. And looking at the 4-hour chart here, we can see a very nice move to the upside, but still not made by 5 waves. This was wave 1, you had a wave 2, you're now in wave 3, expecting wave 4 and then another push higher. So we could be maybe in final stages here, moving today into wave 5 or 3 after better than expected data from Germany and the Eurozone. So just be aware that there can be a new slowdown during the holidays. Now let's take a look also on Aussie dollar. Now Aussie dollar is making a very nice move to the upside, especially since market broke out of this downward correction. So I think that we are here making a new impulse, maybe headed towards 161.8% extension of this latest deeper decline. And if we look at the 4-hour chart, I actually adjusted the wave count a little bit after these recent bullish advances. So I think that there can still be more upside coming after wave 4 setback. So ideally this was wave 1, you had a wave 2 and then wave 3. So now I'm expecting a pullback in the near future and then again more upside. Well, when this wave 4 occurs, if that would be from the near-term levels, then support to watch or observe would be at the area of a former wave 4, which is here. Firstly, the starting point of this sub wave 4 at 0.7450 or around there, or 73.70, it's the lower side of this wave 4. So that would be your area for a potential new resumption higher. The next thing that I think should be important when tracking Aussie dollar is also looking at the Hang Seng index. And if you take a look closely here at this 4-hour chart, you can see that there is potential bullish pattern unfolding. So this is a 5-wave movement still ongoing, meaning the fifth wave here is missing. And if we're really going to see more upside here, then I think that Aussie dollar will stay supported. Now let's take a look also on dollar CAD. Now dollar CAD is making a very nice and sharp drop recently, and it should be because of higher crude oil prices. And if we take a look here firstly on a daily chart, you can see that we are actually in a 5th wave, but still room for more lower prices here to reach these 5th wave targets. And also it's very important to note that wave 5 is a motive wave, meaning it should be made by 5 subwaves. So here is wave 1, wave 2, wave 3, wave 4, expecting a drop into wave 5. Well, watch out these trend lines here. If we will see a push above this trend line, then I think that wave 4 could be in the cards, and then you should watch out for this resistance at 1.2830 or 40 area before this bearish move could resume. But definitely I'm expecting more upside, more downside here, because crude oil is remaining in bullish mode after this very strong break out of this corrective channel. So here I'm looking for wave 1, wave 2, you had an extended wave 3, maybe a new wave 4 is around the corner, and then more upside can be coming. Okay, so higher crude oil can send dollar CAD even lower. And now let's take a look also on the final market today, which will be gold. Well, gold, as you know, is making a very nice reversal here up from 1750 area. We've been tracking this drop from summer highs as a corrective, and so far we have seen a very nice reversal here, as you can see on the daily chart, even back above 1850, which is still somehow very important near-term resistance levels. But because we made some important overlaps here with 1850, I think that actually market has bottomed and that we are headed higher, especially if we also consider that this rise from 1760 up to 1874 was a very sharp one. So I think this is an impulse that suggests more upside. Now sometimes it is very tricky to identify the correct tick low of a intraday correction. So I'm still not sure if maybe wave 2 has already finished here at 18.19, or maybe we'll see another drop towards 61.8% and then a reversal higher. But in both cases, this is a bullish structure, and I'm expecting more upside on gold as long the market is holding this 1760 area. Okay traders, thank you very much for your attention. I hope that you enjoyed this video, and again I will talk to you next week. Bye.